Bitcoin's behavior forecast for the upcoming week. On Monday, April 22nd, Bitcoin is trading around the $65,000 mark, having risen about 1% over the past week. Assessing the market situation allows us to project the potential movements of Bitcoin's rate over the next 7 days. Key factors for the cryptocurrency market this past week included the upcoming Bitcoin halving, geopolitical tensions between Israel, the USA, and Iran, and the stern rhetoric of Federal Reserve representatives regarding interest rates. The nearing halving, which traditionally leads to an increase in demand and price for Bitcoin, bolstered the sentiments of major investors and cryptocurrency holders to retain their coins in anticipation of a future rally. However, the escalation of geopolitical conflict in the Middle East raised fears of a large-scale war involving the USA. Investors feared that in an intensified situation, sellers might crash the Bitcoin market to the $52,000 level. The rhetoric from Federal Reserve officials, forecasts of later interest rate cuts, and disappointing inflation dynamics led markets to price in a delay in monetary policy easing until at least the end of August. This restrained the activity of buyers of risk assets, including Bitcoin. On Friday, April 19th, the market saw increased volatility amid reports of an Israeli missile strike on Iran in response to a previous attack from the Iranian side. Reports emerged of explosions near the city of Isfahan, where significant military and nuclear facilities in Iran are located. Subsequently, Iranian authorities stated that there was no airstrike, but rather a failed attempt to launch drones that were shot down. After Iran's statements about the false alarm, risky assets began to recover lost positions. The BTC/USDT pair recovered by 9.82% to $65,400. The rebound partially worked off a reversal pattern on the hourly timeframe with 3 descending bases: $60,660, $59,678, and $59,600. By the end of the day, the BTC/USDT pair had risen by 0.55% to $63,820. On the night of April 20th, the fourth halving occurred in the Bitcoin network at block 840,000. The reward for each mined block was halved from 6.25 BTC to 3.125 BTC. This reduction in rewards is considered an important economic mechanism affecting Bitcoin's supply and creating a scarcity of the asset. Now, only 450 BTC will be created daily. Market participants reacted very calmly to the halving, as it is an expected event that occurs once every 4 years. After previous halvings, rallies usually began within 1 to 2 months. This halving is different from previous ones in that spot ETFs on Bitcoin were launched in the USA in January. This requires funds to enter the market and buy Bitcoin, increasing demand. But now, the focus of investors and speculators is directed towards geopolitics. After recent liquidations, buyers took a cautious stance in anticipation of a de-escalation in the Iran-Israel conflict. After the halving, fees surged significantly. This was influenced by the launch of a new standard of interchangeable tokens, runes. Miners who process transactions select transactions with higher fees, and this competition for including high-fee transactions stimulated an increase in Bitcoin fees. Thus, high fees, which may be related to new tokens and their effect on the Bitcoin network, may become an additional source of income for miners after the halving, when the block reward, their main source of income, has decreased. This situation is likely temporary, and over time everything will return to normal when the fashion for the new standard passes, and fees again become stable. Movements in the S&P 500 futures significantly influenced Bitcoin dynamics, with the cryptocurrency demonstrating high correlation. Despite the halving, fears of escalating conflict in the Middle East and tightening monetary conditions in the USA created significant turbulence and volatility in the Bitcoin market, restraining buying activity. Since March 5, Bitcoin has formed a support zone at $59,100 to $60,600. Currently, stops for long positions are likely placed under it. Serious resistance lies between $67,200 to $68,100. Over several days, buyers attempted to resume growth, but geopolitical factors outweighed technical ones. As long as the price trades below $67,200, the relevant target for sellers will be the zone $52,100 to $53,100.